So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to The Daily Call from Option Alpha. Hey everyone, this is Kirk here again, and welcome back to The Daily Call. And today's question is, do I have to exercise my option contract to take profits? And so this is a really good question. And before I even get to the question and answering this question, I have to, again, remind you, if you do have a question, because I haven't really actually talked about this a lot on the show, which is my fault, but if you do have a question, the best way to get the question answered is to either shoot me an email, kirk@optionalpha.com, post on our Facebook, Twitter, or Instagram, or wherever else you follow us online, or you can head on over to optionalpha.com/ask, and you can leave me a voicemail there. There's a big red record button there, and you can leave me a voicemail. So again, we've got a lot of these shows coming up. It's all first come, first serve. So if you have a question or even a list of questions, I love those emails the best because that helps me get new content out there, helps me figure out what questions you guys have and kind of puts in your own words, right? Versus me just asking, kind of random questions. So this question actually did come from one of our members who said, again, do I have to exercise my option contract to take profits? And the simple answer to this is no, you don't have to exercise your contract to take profits. Now, I'm assuming that this guy was talking about being long an option contract. So if you bought a put option or bought a call option, the assumption here is that you'd have to exercise it and basically take delivery of the stock or have the stock shares converted from the option contract to be able to take profits. And the reality is that with options trading, you don't have to do that. You can actually sell out of your contract. So you just sell your call option or sell your put option back to the market, reflecting the new value if the value has gone up. Or if you're on the other side of a trade, just for a minute to talk about being short options. So if you sell an option contract to begin with, then you can buy back that option contract, hopefully at a lower price in the future. So you don't have to deal with the stock. We actually try here at Option Alpha, like I try never to deal with the stock. If possible, I think stock is inefficient. And then also brokers charge sometimes a pretty hefty fee for going through the exercise or assignment process. So for us, it's not something that we want to do, though it does happen, right? We've talked about before in other podcasts that, when we go back and track all of the times that we've ever been assigned on contracts, it's less than 1% of the time. And this is thousands of trades now that we've done. So it happens for sure. It's part of the game, part of the process. You should expect it for sure, but it's not all the time. And you definitely don't have to do it to generate income and take profits. So hopefully that helps answer the question. As always, if you guys need anything else, please let me know. And until next time, happy trading. Thanks for joining us on The Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on The Daily Call from OptionAlpha.com.